Well, I don't think there were that many surprises from the testimonies. If we actually look back at the minutes as well as the interviews that Powell has done previously, I think the points were relatively the same. He obviously focused much more on the domestic side of the economy, which continues to deliver. The wage story is still decent. Obviously, a lot of the issues that surrounded around the trade tensions, those soft data and hard data have not actually come out to be weaker than expected, and we still continue to see global economies to continue to move forward at a relatively decent pace. So I wouldn't actually say that, that there was a change, but I think no change was actually good news for markets, especially what we have seen today with a broad rally across Asia.
Yes, but and how long do you think that rally or the momentum to the upside lasts here? And if we break that momentum, what are you watching out for as that catalyst?
Well, I think in the short term, I'm actually quite surprised today that obviously the Asian equity markets have been a good rebound following the overnight rally in the U.S. equity market. But the one thing to note really is that the dollar actually has one extra leg up now again. So the dollar momentum is coming back. And this is a sign where I think it will be a pressure for emerging markets as well as Asian equities. So to me, I think in the summer is usually where I think liquidity is relatively tight, given that a lot of people are taking holidays. I mean, trading volumes are also down. So I would actually say that with the dollar momentum actually creeping higher, it could actually be a headwind again for Asian equities going into the later part of the summer.
Except, of course, if you're looking at Japan, they're benefiting today yet again from the weaker moves in the yen. Do you think this trend continues and continues to be supportive of Japanese equities?
I think in the short term, yes. I think one of the things that we found and we realized is that, well, the correlation between the safe haven status of actually owning Japanese yens to global equities, that correlation has actually weakened in the last few months. And it's a good sign because it means that people are actually using other types of instruments to hedge as opposed to just using the Japanese yen. And I think what we're actually seeing is that there's a broad sell-off now in the Japanese yen story, which is actually a very important reason for us to actually look more into Japanese equities, is because I think a lot of the earnings momentum and the earnings revisions are actually rebounding at this very early stage. Another thing I want to point out also is that I think Japanese equities or Japanese economy in general are also less prone to the trade wars because Japan is actually much less integrated into the U.S. value chain as opposed to markets like in Europe, like in China. So I do think that with the trade war tensions to continue to move higher, escalate, running up to the midterm elections, Japan actually is one of the more least impacted markets going forward. So I do actually look into more focusing on the Japanese equity market going into the next couple of months.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.